everyone, welcome in. I'm Graham with GuruFocus. Today we are going to be taking a look at our most broadly held portfolio, which serves as the basis for the Guru Favorite Stocks ETF. If it's your first time watching one of our videos, or if you haven't already, make sure to click the red button below to subscribe for future content. Jumping into the portfolio, back in 2006, GuruFocus began tracking the most broadly held stocks across all Guru holdings. By tracking these stocks, GuruFocus hopes to answer questions regarding what types of returns can be gained from investing like these gurus. The top 25 stocks were compiled to form the most broadly held portfolio and have been updated and tracked every year since. On December 30th, 2005, the portfolio was first created based upon an investment of $100,000. As of this year, the portfolio has reached a value of $592,748.04 for a total gain of 492.75% since inception. Moving into the 17th year of tracking the portfolio, the most broadly held stocks have beat the market during 14 different years. Some of the best performances were seen in the years 2008, 2019, and 2020, where the portfolio outperformed the market by 8.93%, 15.17%, and 8.64% respectively. Looking at the end of 2021, the most broadly held portfolio returned 27.55%, which just barely edged out the S&P 500 at a return of 26.89%. So this brings up the question of why rebalance the portfolio at all? Well, the portfolio is rebalanced at the end of each year, and the rebalance occurs over the New Year holiday when the market is closed. This allows for the portfolio to be rebalanced based upon the closing prices of stocks at the very end of the calendar year. The overall idea of the rebalance is to compare the screen for the top 25 stocks owned by gurus with the portfolio that was used the previous year. Any stocks that maintain their position in the screen see the same amount of shares in that holding moving into the new year. For any stocks that no longer qualify for the screen, their closing price is used to, quote, sell those stocks from the portfolio. The money from these model transactions is then totaled and used to buy equally priced positions from the new stocks that have qualified from the screener. Considering everything else equal, the stocks that the gurus hold in higher concentrations, i.e. maintain a higher percentage of their portfolio, are ranked higher in our list. After the rebalance moving into this year, there are 6 new companies that have qualified for the screen and have been added into the model portfolio. Topping our list is Alibaba Group Holdings, ticker BABA, which has secured a spot in the portfolio with a total value of $21,413.65 as of recording. Alibaba saw a total of 19 guru buys during the last quarter, and despite 21 sells, it has landed at a total of 34 guru owners. It is important to note here, though, that these guru positions could also predate the widespread sell-off of Chinese companies that occurred after the Chinese government started to crack down on those that were listed on U.S. exchanges. Some of the top guru shareholders in Alibaba now include PrimeCap Management, Ken Fisher, Bailey Gifford, Dodge & Cox, and Frank Sams. While share prices have plunged in the last year due to that sell-off, the company still maintains a market cap of $360.82 billion, and the financial strength rating of 7 out of 10 is pretty decent there. The company also maintains a cash-to-debt ratio of 3.03 that beats 74.99% of industry competitors. A profitability rank of 8 out of 10 is strong, but there are 2 severe warning signs issued for declining gross and operating margins that investors will want to look into. Regardless of widespread investor criticism for the company, it still managed to hit all-time highs for reported revenue and net income as of 2021. A PE ratio of 19.09 is nothing special compared to the retail industry, but a forward PE ratio of 14.63 does bump the company above its competitors. Looking at the GF value line, the company appears to be significantly undervalued, but this is largely stemmed from that sell-off, and the company was overvalued prior to that crackdown by the Chinese government, so take that GF value line rating with a grain of salt. Citigroup landed the second largest new position in the portfolio with a total value of $20,560.24. The stock saw 13 guru buys, 9 sells, and finished last quarter with a total of 27 guru owners. The list of top guru positions in Citigroup includes Hotchkiss & Wiley, ValueAct Holdings LP, Richard Pizzina, Bill Nygren, and First Pacific Advisors. Citigroup maintains a financial strength rating of 3 out of 10, which is as weak as it sounds, and its cash-to-debt ratio of 0.93 ranks it worse than 70% of competitors. Additionally, GuruFocus notes a severe warning sign for poor financial strength, and a medium sign notes new long-term debt has been issued by the company. A profitability rank of 5 out of 10 places the company in the middle ground, and a net margin of 30.49% is the highest the company has recorded in the last decade. The GF value line places the company in the fairly valued category, and shares are priced within $5 of our estimate of intrinsic value. The company's PE ratio of 6.45 also places it in front of 82% of the banking industry, so keep that in mind when you're looking at the stock. Anthem has locked in the third largest spot in the list with a total value of $18,929.26 in the model portfolio. Guru ownership in Anthem just barely fell negative after 11 Gurus sold positions and 10 new buys were established during the last quarter. Some of the top Guru owners in Anthem now include Bailey Gifford, the Vanguard Healthcare Fund, Hotchkiss & Wiley, First Eagle Investment, and Barrow Hanley, Mewini, and Strauss. Anthem's financials show a financial strength of 4 out of 10 that have been pulled down by a cash-to-debt ratio of 0.24 that ranks poorly. However, it maintains a profitability rank of 7 out of 10 that looks much better, and its return on equity has easily been able to support the weighted average cost of capital over the last 10 plus years. There are currently no severe warning signs issued for the company, but potential investors may want to look into the medium warning sign issued for insiders selling shares of the company. Our GF value line gives the company a fairly valued rating, but share prices have it teetering just on the edge of being overly valued. The valuation rank of 2 out of 10 falls in line with our GF value line rating, and the company's price to earnings and price to book ratios rank it worse than competitors. Next on our list is Oracle, which maintains a value of $18,306.91 in the portfolio. The most recent quarter saw overall Guru ownership of Oracle decrease after 15 Gurus sold out of their positions and only 9 new Gurus bought in. Overall ownership now sits at 28 total Gurus. The top Guru positions in Oracle are owned by First Eagle Investment, Ken Fisher, Prime Cap Management, Jeremy Grantham, and Barrow Hanley, Mewini, and Strauss. Oracle stock summary page currently shows a financial strength rating of 3 out of 10, and there are multiple severe warning signs issued on that front. Its profitability rank shows a completely different story at 8 out of 10, with operating and net margins that soar above the majority of competitors. The GF value line has the company at a fairly valued rating, but only because share prices have recently tanked, pulling the company out of the overvalued region. Micron maintains second to last position of the newcomers in our list with a total value of $18,156.53 for the model portfolio. The most recent quarter saw the stock get bought by 8 Gurus, sold by 11, and finished off the quarter with 21 Guru owners. The top Guru positions in Micron are maintained by Prime Cap Management, Lee Liu, Ruane Cunniff, Seth Klarman, and David Tepper. Micron currently has a financial strength rating of 7 out of 10, although a cash-to-debt ratio of 1.27 ranks it worse than competitors. An exceptional profitability rank of 9 out of 10 stands on the shoulders of operating and net margins that exceed 90% of the competition. The company's cash flows took a major hit during the pandemic, but 2021 saw a decent recovery that shows the company heading back towards those pre-pandemic levels. Micron falls into the modestly overvalued section of the GF value line, with shares trading about $15 above GuruFocus's fair value estimate of around $73 per share. Rounding out the list of new positions in the most broadly held portfolio is KKR & Co. with a total value of $17,651.29. The company rounded out the quarter with a total of 16 Guru owners after 4 new positions were established and 8 were sold out. KKR counts ValueAct Holdings LP, Chuck Aker, Diamond Hill Capital, John Rogers, and Bill Nygren among its top Guru shareholders. The company's financial strength rating of 3 out of 10 is poor and has been pulled down by struggling equity to asset and debt to equity ratios alongside low interest coverage. The 4 severe warning signs for the company also highlight new long-term debt that has escalated over the last several years. A profitability rank of 5 out of 10 finds the middle ground thanks to a relatively strong operating margin, but a net margin of 39.84% pulls the company below its 10-year average. A drastic change on the GF value line recently shows the company falling just below GuruFocus's fair value estimate of around $73.62 per share. Now, switching gears away from some of the newer holdings, the model portfolio boasts several holdings that far exceeded expectations over the years. Overall, the top 5 highest returns have been seen from Apple, Microsoft, Alphabet's Class A and C shares, and Berkshire Hathaway. These holdings were added throughout the history of the portfolio and have stacked up returns that most investors only dream about. Apple leads the charge with a massive total change of 1,058.04%. The holding was established in 2012 when share prices were around $15 a share, and since then, Apple has established itself as one of the most dominant forces in the tech industry and has become one of the most valuable companies in the world. A holding in Microsoft comes in a close second with a staggering change of 1,045.54%. Microsoft was added to the model portfolio right at the beginning when its shares were trading around $27. Throughout the history of the model portfolio, Microsoft has blossomed in excess of a total market cap of $2 trillion. Alphabet's Class A shares have held a position in the portfolio since 2015 and have steadily increased in value for a total gain of 414.62%. The company's shares rocketed upwards in value throughout the pandemic and have the company hot on the heels of Microsoft and Apple as one of the world's most valuable companies. The portfolio also maintains a position in legendary investor Warren Buffett's Berkshire Hathaway. The Class B shares have been held since 2008 and have grown by 290.3% since the position was first established. The storied conglomerate has consistently piled in profits over the decades, making Buffett one of the world's richest people. Rounding out our list is Alphabet's Class C shares with a total gain of 163.89%. The shares were purchased late in the portfolio's history in 2019, but have still managed to rank among the best thanks to Google's drastic increase in value over the last few years. Now, compared to some of their predecessors, the newcomers in the model portfolio have yet to show any significant gains, but they do offer a good place to start looking for potential investment ideas. Looking to the future, these companies could be worth keeping an eye on, and we recommend you check out some of our other model portfolios as well to gain some additional ideas and expand your investment horizons. As always, though, we do recommend that you make sure to do your own research or consult a registered investment advisor before making any investment decisions. If you haven't already, click that red button down below to subscribe to our channel, and make sure to drop a like if you enjoyed the video. That'll be it for today, and we'll see you on our next video.